Hello, everyone. I'm Chris Kapches, President of Chestnut Park Real Estate, and today I'm going to give you your August market report for Toronto and Toronto's outlying regions. I'm going to begin this presentation, first of all, by saying it is a very complicated market and it'd be difficult to get all of the information to you in the short period of time that we have for this video. And in that regard, I'm going to begin this report by actually quoting Charles Dickens from A Tale of Two Cities, because the market does look a little bit like it was the best of times and a little bit like it was the worst of times. And it definitely looks a little bit like it was the age of wisdom and a little bit like the age of foolishness. So essentially, I'm talking about dichotomies, and that is essentially what is happening in the marketplace. If we look at the overall marketplace, that is the sales volume, in August, 5,294 properties were reported sold, which is down by 5.2% compared to last August. But to put that number into perspective, the 5,294 that sold, I went back and looked at how many properties sold back in August of 2023, in other words, 20 years ago. And at that time, 6,549 properties were reported sold, 23% more than were sold in August of 2023. So that gives you an indication of how slow the sales volume in August was. In other words, slower than it was 2 decades ago, when the population of the Greater Toronto Area was 1/2 the size that it is now. That's the overall market. But if we dig a little deeper and we start looking at the actual sales that took place, we actually get another market. In other words, referring back to Dickens, the best of times. If we look at the sales that took place in, for example, detached, semi-detached, and even condominium apartments, in that number, namely the 5,294 sales, we see that they sold above asking for the most part, and they sold at record level paces. So let me give you some examples. For example, in the city of Toronto, all the properties that sold in only 20 days and at 101% of their asking price. Detached properties sold for 101% in only 18 days of their going on to market. Semi-detached properties sold for a surprising 105% of their asking price and in only 13 days. And if we were to drill down even deeper, say to the City of Toronto's eastern districts, we get this eye-popping data, namely all semi-detached properties in the eastern district sold for 107% of their asking price and in only 11 days. If I were to isolate that data, separate and apart from the overall sales, it would be as robust a market that you could find. So what accounts for this dichotomy, the best of times, the worst of times? Well, there's threefold factors that are at play: demand, supply, and affordability. On the demand side, we have an incredible number of buyers out there who would like to buy Toronto and area real estate. They're constrained, and I'll get into that in a moment. In the month of August alone, 100,000 new immigrants came to Canada. A great majority of those immigrants will make their way to the area that this market report is about, namely the greater GTA. In addition to that, 80-odd thousand new immigrants have been coming to Canada on a monthly basis since the beginning of the month. All of those people need a place to live. And those people that have made their way to Canada in 2023 are only the tip of an iceberg of a huge amount of immigration that has been accumulating since the beginning of the pandemic. And it's continuing, it will continue, which will continue to put pressure on the demand side. On the supply side, we had 15,497 listings of properties available for buyers at the end of August. To put that into perspective, again, I went back to the year 2023, and at that time, we had almost 20,000 listings. So when the population was smaller, we had actually more properties for buyers to purchase than we currently have. So we have huge demand and we have historically low inventory. The third factor is affordability. As discussed in previous market reports, the Bank of Canada has consistently increased 10 times the bank rate. We were very fortunate in early September that they didn't increase it again, but we are at 5% now. That has eliminated a lot of buyers from the marketplace. So what we have is we have huge demand, limited supply, and an affordability problem, which means that restricts the number of properties that can be sold because there are a lot of people that want to buy them, but very few that can afford them. And that's why we have a tale of two cities. Those properties that are selling quickly and they're selling over their asking price. In fact, even condominium apartments, they were the least expensive housing form in our marketplace, also saw sales increase by almost 8% in the month of August. So that is the complex market that we have. And I think the other component is we may be going through a restructuring. And what I mean by that is we may be going through a period that we went through in the early 90s. I'm not sure we have enough data to conclusively make that determination, but it appears that that's the case. I will follow that over ensuing market reports to see if that's developing, and we'll be reporting back. So until we provide you with the September market report, which, given everything that I've discussed today, I'm really looking forward to, stay well, and I look forward to providing it to you next month. Thank you.